Hey, if you watch until the end, there is a special surprise waiting for you. Stay tuned, you will not want to miss it.
What if I told you that one man's strategy completely shook the financial world, revealing corporate frauds, predicting market crashes, and making billions while others lost everything? David Einhorn didn't just play the game, he changed the rules. But here's the catch. While some call him a genius, others brand him a market vulture. Intrigued? Stick around until the end, and I'll show you exactly how this man challenged the giants of Wall Street and won. The origins of a financial strategist. David Einhorn's story is one of curiosity, intelligence, and the relentless pursuit of excellence. From an early age, he showed a remarkable aptitude for recognizing patterns that others often overlooked. Born on November 20, 1968, in Milwaukee, Wisconsin, Einhorn grew up in an environment that encouraged constant learning. His journey into the financial world began at Cornell University, where he graduated with honors in government in 1991. While economics wasn't his initial focus, his ability to grasp complex systems and detect underlying patterns was a clear precursor to his future success as a financial strategist. Einhorn's career kicked off at Donaldson, Lufkin and Jenrette, a company where he began to unravel the complexities of capital market. During this time, he honed his skills by observing the cyclical nature of markets and learning how data-driven decisions could reshape the future of companies, and in turn, the future of investors. But what really set Einhorn apart wasn't just his intelligence, it was his unwavering desire to challenge the conventional wisdom that dominated Wall Street. Unlike his peers, who often followed established formulas, Einhorn sought innovative ways to create value. This willingness to learn from others' mistakes became one of his core principles. He would spend hours studying historical case studies of market success and failure, soaking in every lesson as if it were a blueprint for achieving greatness. One notable influence on his thinking came from his family, particularly his grandfather, a successful businessman who encouraged him to think big and embrace calculated risk. This familial support gave Einhorn the confidence to take bold steps in his career, even when others might have hesitated. As his career progressed, Einhorn's inquisitive nature drove him to refine his financial skills further. His dedication to understanding every detail, from balance sheets to intricate financial models, allowed him to develop a deep understanding of how markets function. He was preparing himself for the challenges ahead, knowing that success wasn't just about luck, it was about being ready to seize opportunities that others might miss. Einhorn's strategic insight grew over time, and he soon became a leading figure in the financial world. It's impossible to ignore the genius behind his ability to question the status quo and develop innovative strategy. He didn't just find his place in the market, he reshaped it. His formation of Greenlight Capital in 1996 marked the start of a new era for the investment world. But the seeds for this venture had been planted much earlier. The traits that defined Einhorn, his intelligence, curiosity, and courage, would become the driving force behind many of his future endeavors. His path, one that led to reshaping the investment landscape, began with the simple yet powerful idea that true financial success requires more than following trends. It requires the bravery to challenge the norm. This would be just the beginning of his extraordinary journey. Founding Greenlight Capital in 1996, David Einhorn took a leap that would forever alter his financial career. He founded Greenlight Capital, starting with just $900,000, a modest sum compared to the giants of the investment world. Einhorn had a vision that extended far beyond mere financial success. He didn't just want to run a hedge fund. He wanted to create something revolutionary, a fund that would challenge the traditional norms of investing. From the very first day, his goal was clear: to build a hedge fund that didn't just compete in the market, but one that transformed it. Einhorn's philosophy was a departure from the norm. He understood that markets were driven by both logic and emotion, but those who could separate the two, recognizing emotional phenomena from fundamental reality, would be the ones who truly succeeded. This insight led Greenlight to adopt a unique approach, investing in undervalued companies, while simultaneously shorting those that were overvalued. This wasn't just about number. It was about understanding the psychology behind market behavior and making calculated decisions based on that understanding. At first, Greenlight Capital faced the typical hurdles of any new hedge fund: building trust, attracting investors, and proving its worth. But Einhorn wasn't just relying on his intelligence. He was armed with a deep conviction that the world of finance needed disruption. His early successes with undervalued stocks, particularly small companies that others had ignored, quickly garnered attention. The market took notice, and so did investors who saw that Einhorn was onto something special. The name Greenlight was chosen with purpose. It wasn't just a name. It was a symbol of progress, a green light to move forward, to embrace new opportunities. Einhorn wanted his fund to represent this constant forward momentum, even in the face of uncertainty. This mindset permeated the culture of Greenlight, as he recruited a team that shared his intellectual curiosity and passion for uncovering the mysteries of the financial world. Together, they became known for thinking independently and questioning established ideas. As Greenlight Capital gained momentum, Einhorn's reputation grew. Within just a few years, the hedge fund had posted consistent, impressive returns, outpacing many of its competitors. This caught the eye of the financial media, and Einhorn was soon recognized as one of the brightest investors of his generation. Yet for him, it wasn't just about the money. It was about creating an impact. Every decision made by Greenlight was rooted in a deep analysis, a commitment to excellence that went beyond mere profit-making. Despite his growing success, Einhorn never lost sight of the values that had guided him from the beginning. He was transparent with his investors, always taking the time to explain his decisions and the rationale behind them. This was rare in an industry often criticized for its lack of openness. This commitment to transparency would become crucial, especially as the challenges of the financial world became more complex. The founding of Greenlight Capital was just the first chapter of Einhorn's incredible journey. His vision, bravery, and innovative approach were transforming not only his own career but the financial landscape itself. However, this was only the beginning. In the years to come, Einhorn would prove that his willingness to face difficult challenges head-on, even when it meant going up against the titans of finance, would solidify his place as one of the most influential investors of his time. In innovative investment strategies, David Einhorn isn't just an investor. He's a master strategist, constantly pushing the boundaries of what's possible in the financial world. From the very start of his career, Einhorn was determined to find strategies that went beyond conventional thinking. While most investors were following the crowd, Einhorn was already thinking outside the box, leveraging logic and a keen sense of intuition to uncover hidden opportunities. One of his most groundbreaking strategies involved using short positions in a way that had rarely been seen before. Shorting stocks, or betting that a company's stock will decline, is a high-risk strategy, but when done correctly, it can lead to extraordinary rewards. Einhorn understood this principle deeply and used short positions not just as a tool for speculation, but as a way to expose corporate frauds and financial weaknesses that others couldn't see. One of his most famous short positions was against Allied Capital, a company that had been inflating its financial results and hiding significant flaws in its business model. By betting against the company's stock, Einhorn didn't just make money. He revealed deep-seated issues that ultimately led to the company's downfall. This was a powerful statement. He wasn't just playing the game, he was changing the rules. But Einhorn didn't just rely on shorting stocks. He also had a remarkable ability to spot undervalued companies that had been overlooked by others. He would dive deep into financial statements, looking for hidden gems that others had missed. One notable example of this was his investment in companies that were being ignored by the broader market. These investments were often overlooked by analysts, but Einhorn's unique perspective allowed him to recognize potential that others could. This ability to spot the unseen, to identify value where others saw none, became a key pillar of his strategy. Perhaps one of the most impressive aspects of Einhorn's approach is his emotional intelligence. In a market that can be wildly unpredictable, he has mastered the ability to stay calm under pressure. While many investors panic during times of extreme volatility, Einhorn has been known to seize those moments as opportunity. His philosophy is simple. Patience and a clear mind are often the keys to success. For instance, during times of market turmoil, when most investors were selling off their stocks in fear, Einhorn was often the one buying. Recognizing that fear-based selling created massive opportunities for those willing to look deeper, Einhorn's strategies weren't just about numbers. They were also about understanding the human behavior behind those numbers. He understood that the market isn't just driven by logic. It's also influenced by fear, greed, and emotion. By recognizing this, he could position himself to profit when emotions distorted the market's true value. This insight into human nature gave him a unique edge over other investors, allowing him to spot patterns that were invisible to most. Another key part of Einhorn's strategy was his dedication to thorough research. Before making any investment, he would dig deep into a company's financials, often questioning executives directly to get a sense of what was really going on behind the scenes. This level of detail and commitment to truth-telling set him apart from many other investors, who were often content with surface-level analysis. Einhorn's ability to dig deeper and ask the tough questions not only led to profitable investment, but also helped expose fraudulent behavior in some of the market's biggest players. Lastly, Einhorn's strategic use of communication became one of his most powerful. In 2008, his famous short position against Lehman Brothers was preceded by a bold presentation where he laid out the bank's vulnerabilities to a room full of investors. This wasn't just about making money, it was about educating the market, making others aware of the risks they were ignoring. His transparency and willingness to share his research publicly made him a unique figure in the world of finance, demonstrating that being a successful investor doesn't just mean keeping secret. Sometimes it means sharing your insights to help others make informed decisions. The Allied Capital case, one of the most pivotal moments in David Einhorn's career, came in 2002, when he took on one of the most controversial cases of his life, the Allied Capital ban. This wasn't just any investment decision. It was a high-stakes fight that saw Einhorn take a short position against a company that many had viewed as a reputable player in the financial world. Allied Capital was a well-respected investment, but Einhorn saw something others didn't. He noticed inconsistencies in their financial statement, and what started as a hunch turned into a full-scale investigation that would forever change his trajectory. Einhorn's deep dive into Allied Capital's finances revealed significant issues that the company had been hiding from investors. For months, he meticulously analyzed balance sheets and cross-referenced data, uncovering irregularities that others had overlooked. These weren't just small discrepancies, they were red flags that pointed to a much larger issue. Allied Capital had been inflating its reported profit, masking the true state of its financial health. Einhorn's ability to spot these flaws not only solidified his reputation as a sharp and thorough analyst, but also gave him the courage to make his move. He didn't just point out the problem, he took action, shorting the company's stock and publicly revealing his finding. The reaction to Einhorn's allegations was anything but supportive. Many in the industry viewed him as a troublemaker, questioning his motives and credibility. After all, Allied Capital was a respected firm, and few believed that such a prominent company could be hiding such severe financial mismanagement. The company's executives fought back aggressively, launching campaigns to discredit Einhorn and his accusation. He even tried to undermine his credibility by questioning his character, but Einhorn stood firm. His analysis had been thorough, and he wasn't about to back down just because the odds were against him. This was more than just about making money. It was about exposing the truth and standing up to the corporate giants. What made the Allied Capital case so extraordinary was not just Einhorn's ability to uncover the truth, but his resilience in the face of extreme opposition. While many would have faltered under the pressure, Einhorn remained steadfast. His willingness to challenge the status quo in such a high-profile way marked him as a truly unique figure in the world of investing. It wasn't just about the money he stood to make, it was about sending a message to the market that no company, no matter how large or respected, was beyond scrutiny. As the months went on, Einhorn's investigation continued to gain traction, and the pressure on Allied Capital mounted. The SEC began to take notice, and a formal investigation was launched into the company's practices. In 2008, the truth came out. Many of the allegations raised by Einhorn were validated by regulatory bodies, confirming that Allied Capital had, in fact, engaged in fraudulent practice. This was a significant moment, not just for Einhorn, but for the entire financial world. It proved that even the most established companies could be hiding secrets, and that an investor with the right skills and the courage to dig deeper could expose these truths. The outcome of the Allied Capital case wasn't just a personal victory for Einhorn. It was a victory for transparency in the financial market. His relentless pursuit of the truth inspired other investors to take a more critical look at the companies they were investing, and it encouraged a culture of deeper due diligence. Investors realized, just like Einhorn, They could challenge the conventional wisdom and uncover the truths that were hidden beneath the surface. The lessons learned from this case would go on to shape the way financial analysis was approached in the years that followed. The Allied Capital case didn't just solidify Einhorn's reputation as a brilliant investor. It made him a symbol of integrity and transparency in an industry often criticized for its lack of both. He had shown that it was possible to stand up against corporate giants and expose the truth, no matter how unpopular it might be. But this case was just the beginning. The lessons Einhorn learned from this battle would be crucial as he prepared to take on even bigger challenges in the future. The 2008 financial crisis and Lehman Brothers. The 2008 financial crisis stands as one of the most chaotic moments in modern history, and it was during this time that David Einhorn truly cemented his legacy as a financial visionary. While most investors were blindsided by the sudden collapse of major financial institutions, Einhorn had already seen the writing on the wall. In the years leading up to the crisis, he had grown increasingly concerned about the state of the financial system, particularly about the risks hidden within some of the largest financial institutions, including Lehman Brothers. Einhorn had a unique ability to analyze financial data and spot red flags that others simply ignored. By 2008, he had already started to question Lehman Brothers' practice. His suspicions were based on a series of irregularities he had noticed in the firm's financial statement. The bank's use of questionable accounting practice, including the overvaluation of risky assets, was a clear warning sign for Einhorn. He began to recognize that Lehman was hiding its true vulnerability, and as a result, he decided to take a short position against the bank, betting that its stock would eventually collapse. When Einhorn made his public predictions about Lehman Brothers' impending failure, many in the financial world were dismissive of his claim. After all, Lehman Brothers was one of the largest investment banks in the world, and its stability was considered crucial to the global financial system. However, Einhorn's confidence was rooted in his thorough research and understanding of the market. He wasn't just guessing. He had studied the bank's financials in great detail, and the evidence was clear to him. Lehman was on the brink of collapse. He was among the first to sound the alarm, and his bold stance caught the attention of investors, regulators, and the media. As the months unfolded, the crisis hit with full force. Lehman Brothers filed for bankruptcy in September 2008, and the global financial system began to unravel. The news sent shockwaves through the market, triggering a cascade of failures and a widespread panic. But for Einhorn, it was a moment of validation. His decision to short Lehman Brothers had not only saved his investors from massive losses, but also highlighted the fundamental flaws in the financial system. While the world watched in disbelief as one of the oldest investment banks collapsed, Einhorn's strategy paid off handsomely. The collapse of Lehman Brothers was a turning point in the financial crisis, and it cemented Einhorn's reputation as one of the most astute and courageous investors of his generation. But his impact went beyond just making a profitable bet. By predicting Lehman's failure, Einhorn revealed the hidden risks within the financial system that others had either overlooked or ignored. His analysis exposed the dangerous practices that had led to the downfall of one of the largest financial institutions in the world, sparking a broader conversation about the need for more transparency and regulation in the financial industry. Einhorn's role in the Lehman Brothers debacle wasn't just about predicting a corporate collapse. It was about demonstrating the importance of critical thinking, research, and transparency in the world of finance. While many investors were caught off guard by the crisis, Einhorn's ability to see through the smoke and mirrors of Wall Street gave him an edge that proved invaluable. He had shown that, by questioning the status quo and digging deeper into the numbers, it was possible to uncover truths that could protect investors from financial ruin. The fallout from the Lehman collapse was felt worldwide, and the lessons learned from this event would shape the future of financial markets. The crisis forced regulators and investors to reevaluate the way they approached risk, transparency, and corporate accountability. Einhorn's ability to see through the cracks in Lehman Brothers' facade became a textbook example of how investors should approach the market. With caution, skepticism, and a willingness to challenge the narrative, it was a testament to Einhorn's unique approach to investing, one that combined intellectual rigor with a deep understanding of human behavior and market dynamics. For Einhorn, the 2008 crisis was a defining moment. It solidified his place in history as a financial genius who could navigate even the most turbulent waters with insight and precision. But despite his success during the crisis, Einhorn knew that the road ahead would be just as challenging. The financial landscape was shifting, and new opportunities as well as new risks were emerging. But, as always, Einhorn was ready to take on whatever the future held. Armed with the lessons he had learned from the collapse of Lehman Brothers and the broader financial crisis, his book Fooling Some of the People All of the Time in 2008, David Einhorn released a book that would become an essential part of his legacy, Fooling Some of the People All of the Time. This book wasn't just another financial memoir, it was a deep dive into the world of corporate fraud, financial analysis, and the lengths to which companies will go to protect their reputation. The book chronicled Einhorn's famous battle against Allied Capital, a company that he accused of engaging in fraudulent practice. Through his detailed investigation and relentless pursuit of the truth, Einhorn not only exposed corporate wrongdoing, but also raised important questions about the ethics and transparency of financial markets. The title of the book itself, Fooling Some of the People All of the Time, was a direct reference to the tactics employed by Allied Capital, whose financial reports were, in Einhorn's view, designed to deceive investors. The book delves into the meticulous work Einhorn did to uncover discrepancies in the company's financials, which had been hidden from the public eye for years. Einhorn's investigative journey is both fascinating and instructive, showing how a combination of patience, diligence, and intellectual curiosity can lead to breakthroughs in the most unlikely of places. What made Fooling Some of the People All of the Time stand out wasn't just the story of corporate fraud, it was Einhorn's transparency and candidness. Throughout the book, he doesn't just present himself as a hero. He reveals his own struggles, frustrations, and the personal toll that the battle against Allied Capital took on him. He describes the intense pressure he faced as the company tried to discredit him, including personal attacks and legal challenges. This vulnerability makes the book more than just an analysis of a financial scandal. It becomes a human story of perseverance, conviction, and the pursuit of justice. Einhorn's book also offers an inside look at the world of hedge fund investing. He details his thought process behind shorting Allied Capital, the research and analysis that led to his decision, and the broader implications of his finding. For aspiring investors, the book provides a masterclass in due diligence, revealing how Einhorn used a combination of data analysis, intuition, and questioning of conventional wisdom to uncover the truth about the company. His approach isn't just about making money. It's about having the courage to challenge the status quo and stand up for what's right, even when it's not the popular thing to do. In addition to its financial insight, the book also tackles broader issues of accountability in the corporate world. Einhorn raises important questions about the role of auditor, regulator, and investors in holding companies accountable for their actions. He highlights the need for more transparency in financial reporting and the responsibility that all market participants have to ensure that the system is fair and honest. These lessons are particularly relevant today, as investors continue to grapple with issues of corporate governance and ethics. In an increasingly complex financial landscape, Fooling Some of the People All of the Time was not only a critical success, it also played a key role in shaping public discourse around corporate fraud and market transparency. The book gave a platform to Einhorn's perspective, allowing him to explain his views in his own words and further cement his reputation as a financial thought leader. It also brought attention to the importance of skepticism in investing, reminding readers that the most obvious investment opportunities aren't always the best ones. The impact of the book went beyond just the financial community. It resonated with anyone who has ever faced an uphill battle in pursuit of truth and justice. Einhorn's journey showed that the road to success is often paved with obstacles, but with persistence, knowledge, and a strong moral compass, even the biggest challenges can be overcome. It wasn't just a financial book. It was a story of courage, conviction, and the relentless pursuit of truth. For Einhorn, writing the book wasn't just about telling his side of the story. It was about using his experience to teach others. His approach to financial analysis, His commitment to transparency and his willingness to challenge powerful institutions set a new standard for how investors should think about the market. The book wasn't just a reflection of past events, it was a call to action for the future of financial market, urging readers to be more diligent, more skeptical, and more aware of the forces that shape the world of investing. Impact on the financial market. David Einhorn's influence on the financial markets is profound and far-reaching. He didn't just accumulate wealth through smart investment. He reshaped the very way people think about investing, transparency, and market analysis. In a world where many investors are content to follow trends and rely on surface-level data, Einhorn challenged the status quo and proved that a deeper, more inquisitive approach could lead to extraordinary success. His work with Greenlight Capital demonstrated that questioning conventional wisdom and digging into the numbers could uncover hidden opportunities and hidden dangers before the market recognized them. One of the most significant aspects of Einhorn's impact was his promotion of deep, independent analysis. He taught the financial community the importance of looking beyond the surface and asking critical questions. By exposing fraudulent practices, such as those he uncovered with Allied Capital, Einhorn showed that the market isn't always as transparent as it seems. He forced investors to reconsider their assumptions about big, established companies, revealing that even the most respected firms could be hiding financial problems. This led to a broader shift in how investors approach due diligence, with more emphasis on comprehensive independent research and skepticism toward overly optimistic narrative. Einhorn also played a critical role in changing the perception of short selling. Before his success with positions like Allied Capital and Lehman Brothers, short selling was often viewed as a speculative and risky practice. Many investors saw it as a way to profit from a company's downfall, without necessarily adding value to the market. Einhorn redefined short selling by using it not just as a way to profit, but as a way to expose weaknesses and force greater transparency in the market. His strategic use of short positions made it clear that short selling could be an essential tool for identifying systemic risks and protecting investors from the dangers of inflated valuation. His impact didn't stop there. Einhorn also influenced how hedge funds operate. Through Greenlight Capital, he set a new standard for transparency and communication with investors. In an industry that has often been criticized for its secrecy, Einhorn's open approach to sharing information and explaining his decisions made him stand out. He didn't just want to make money. He wanted to change the way people thought about financial management. By providing clear and concise explanations of his investment strategy, he helped to foster trust between hedge fund managers and their clients, showing that openness and integrity were just as important as financial returns. Einhorn's success with unconventional investment strategies also had a ripple effect on the broader investment community. His ability to see value in overlooked companies, as well as his courage to bet against overvalued giants, inspired a new generation of investors to adopt a more contrarian approach. Instead of following the herd, they were encouraged to think independently, trust their analysis, and be willing to challenge the prevailing market sentiment. This shift toward independent thinking helped fuel the growth of a more diverse and dynamic investment community, where innovative ideas and bold strategies became more widely embraced. Moreover, Einhorn's approach to risk management became a blueprint for other investors. While many hedge fund managers focused on maximizing returns at all costs, Einhorn understood the importance of balancing risk with reward. His ability to navigate the turbulence of the 2008 financial crisis without significant losses to his investors highlighted his mastery of risk management. He didn't just make money during the crisis. He helped his investors avoid massive losses by staying ahead of the curve. His ability to mitigate risk while still generating strong returns became a key lesson for others in the industry. Lastly, Einhorn's focus on corporate governance and accountability left a lasting mark on the financial world. He became a vocal advocate for stronger regulatory oversight and better transparency within corporations. He made it clear that the financial system should prioritize ethical practices and long-term sustainability over short-term profit. His efforts to hold companies accountable for their actions, particularly through his public stances on the lack of transparency in financial reporting, contributed to the growing calls for greater corporate responsibility in the wake of the financial crisis. David Einhorn's impact on the financial markets cannot be overstated. His ability to challenge convention, expose fraud, and foster a culture of transparency and ethical investing has left a lasting legacy. As financial markets continue to evolve, Einhorn's influence will likely continue to shape the way investors approach risk, transparency, and corporate accountability. His career is a testament to the power of independent thinking, and his strategies have inspired countless others to rethink how they approach the market and, more importantly, how they understand the forces that drive it. Controversies and challenges faced. David Einhorn's career has been marked by remarkable achievement, but it has also been fraught with challenges and controversy. As an investor who was not afraid to go against the grain, Einhorn often found himself at odds with powerful institutions and individuals. His willingness to take bold positions, especially when they challenged the established order, earned him both admiration and criticism. In an industry where maintaining a favorable reputation is often as important as generating returns, Einhorn's ability to handle controversy while staying true to his principles set him apart. One of the most notable controversies in Einhorn's career came from his short position on Allied Capital. His investigation into the company's financials and his subsequent public accusations of fraud caused a stir in the financial world. While his claims were eventually validated, the process of exposing the truth was far from easy. Allied Capital did everything in its power to discredit Einhorn, launching a smear campaign against him and questioning his motive. The public backlash was intense, with many investors and analysts dismissing his claims as baseless. Yet Einhorn remained unwavering in his stance, continuing to stand by his research and refusing to be intimidated by the pressure from the company and its allies. Einhorn's confrontation with Allied Capital highlighted one of the central themes of his career: his willingness to stand alone in the face of adversity. In the high-stakes world of investing, where billions of dollars are on the line, going against a respected company can be a career-defining move, for better or worse. But Einhorn was never one to back down from a challenge, especially when he believed he was in the right. His determination to expose corporate malfeasance, even when it meant facing public ridicule, proved that he was not just an investor, but a financial activist, willing to fight for transparency and accountability in the industry. The 2008 financial crisis also brought its share of challenges and controversies for Einhorn. While his short position against Lehman Brothers was a brilliant move that saved his investors from catastrophic losses, it also attracted criticism from some corners. Many accused him of profiting from the downfall of a major institution at a time when the world was already grappling with a financial meltdown. While Einhorn was steadfast in his belief that Lehman's collapse was inevitable due to the company's flawed practice, the media and some investors painted him as a vulture who capitalized on the misery of others. This type of criticism is common for those who take controversial positions, but Einhorn's handling of the situation demonstrated his resilience and confidence in his analysis. Another significant challenge that Einhorn faced occurred in 2013, when he took on one of the largest companies in the world, Apple. Einhorn argued that Apple was hoarding an excessive amount of cash and demanded that the company distribute more capital to its shareholders. His campaign against Apple's cash reserves was met with strong resistance from the company and its supporters. Apple's CEO, Tim Cook, publicly dismissed Einhorn's proposal, and many investors rallied behind the company's strategy. Einhorn's decision to take on a giant like Apple further solidified his reputation as an investor who wasn't afraid to challenge even the most powerful corporation. But it also highlighted the potential risks of such high-profile confrontation. Despite the backlash he often received, Einhorn's response to criticism was always measured and thoughtful. He didn't shy away from defending his position, but he also understood that controversy was an inherent part of his approach to investing. For Einhorn, controversy was not a deterrent, but a byproduct of his commitment to transparency and integrity. He believed that challenging the system, questioning assumptions, and exposing flaws were essential to improving the financial market, even if it meant facing opposition from powerful players. The challenges Einhorn faced didn't just come from external forces. They also included the pressures of running Greenlight Capital. In the years following the 2008 financial crisis, the hedge fund struggled to maintain the same level of success it had achieved earlier. The market had shifted, and some of the strategies that had worked so well during the financial crisis were no longer as effective. This period of underperformance led many to question whether Einhorn was losing his edge. However, Einhorn remained focused on adapting to the changing market conditions. He acknowledged the challenges but refused to compromise on his principles. This resilience and commitment to his values, even in the face of adversity, has been a defining characteristic of his career. Einhorn's career is a testament to the fact that success in the financial world is not without its challenges. The controversies and setbacks he faced only served to highlight his determination to push for a better, more transparent financial system. He didn't just focus on generating profits. He aimed to expose the flaws in the system and force the industry to confront its weakness. While his bold approach may have earned him enemies along the way, it also solidified his reputation as one of the most influential and courageous investors of his time. David Einhorn's legacy. David Einhorn's legacy in the financial world is not just defined by his success as an investor, but by his profound impact on the way markets operate and how investors approach their craft. Over the years, he has shown that investing is more than just a numbers game. It's about understanding the underlying dynamics of human behavior, questioning established norms, and staying true to one's principles. Einhorn's career has been marked by his relentless pursuit of truth, his willingness to challenge the status quo, and his ability to identify opportunities and risks where others saw none. His legacy is one of intellectual rigor, transparency, and ethical investing, inspiring generations of investors to think critically, act boldly, and challenge conventional wisdom. One of the core components of Einhorn's legacy is his commitment to deep, independent analysis. While many investors rely on popular trends, media narrative, or the advice of others, Einhorn showed the power of going against the grain. His investigative work on Allied Capital and his short position on Lehman Brothers demonstrated his ability to look beyond the surface and uncover hidden truths that were often overlooked by the market. He believed that success in investing required more than just understanding financial reports. It required a willingness to question assumptions, dig deeper, and always seek the full picture. This approach has inspired countless investors to adopt a more critical, thorough approach to their own research. Einhorn also revolutionized the way investors view short selling. Before him, short selling was often seen as a speculative and risky practice. However, Einhorn showed that short selling could be a powerful tool for uncovering corporate fraud and holding companies accountable. His short position against Allied Capital, for instance, not only yielded significant profits but also exposed the company's fraudulent practice, forcing the industry to pay attention to the risks of inflated valuation. Einhorn's use of short selling helped reshape its image from a speculative tactic to a strategic tool for uncovering hidden risks and promoting market transparency. Beyond his investment strategy, Einhorn's influence extended to the culture of hedge funds and investment management. He was one of the first to champion transparency and open communication with investors, challenging the traditional secrecy that has long been prevalent in the industry. Through Greenlight Capital, Einhorn set a new standard for how hedge fund managers should interact with their investors by being honest, transparent, and providing clear explanations for investment decisions. This approach not only earned him the trust of his investors, but also inspired other hedge fund managers to adopt a more open and ethical approach to managing client funds. Einhorn's legacy is also marked by his advocacy for corporate governance and accountability. His work exposed the flaws in financial reporting and the lack of oversight that allowed companies to mislead investors. He understood that for the financial system to function properly, it needed to be transparent, ethical, and accountable to investors and the public. His efforts to expose corporate fraud and demand greater accountability from companies and regulators laid the groundwork for the broader push for financial reform that followed the 2008 crisis. Einhorn's legacy continues to influence debates on regulatory reform, corporate responsibility, and market ethics. Perhaps one of the most enduring aspects of Einhorn's legacy is his commitment to doing what is right, even in the face of adversity. Throughout his career, he has shown time and time again that success in the financial world is not just about making money, it's about standing by your principles and fighting for a fairer, more transparent system. Highs, battles with Allied Capital, Lehman Brothers, and even Apple were not just about financial gain. They were about exposing truths, challenging entrenched powers, and advocating for the best interests of investors. Einhorn's willingness to confront powerful corporations and fight for what he believed in has solidified his reputation as a champion of integrity in the financial world. Looking forward, Einhorn's legacy will continue to inspire future generations of investors, financial analysts, and market participants. His work has redefined the role of an investor, showing that it's possible to balance financial success with ethical responsibility. He has shown that it is possible to succeed in the financial markets without compromising on one's value. His influence will continue to resonate in the financial industry as investors continue to seek out the lessons he imparted, the importance of deep analysis, the courage to challenge the status quo, and the belief that the market should be a force for good, not just for profit. David Einhorn's legacy is a testament to the power of independent thinking, ethical investing, and the relentless pursuit of truth. Through his work, he has proven that financial success is not just about following the herd. It's about charting your own course, questioning assumptions, and always striving to make the world a better place. His influence on the market will be felt for years to come, and his example will continue to guide investors who aspire to achieve greatness, not just in finance, but in life. So, was David Einhorn a hero exposing the truth, or just a man who profited from others' downfall? One thing is clear: he changed the game forever. If you want to dive deeper into the minds of financial titans and see the strategies that could shape the future, hit that subscribe button, like this video, and join the revolution.